How's everybody? Hey, welcome back to the channel. So today we are going to be talking about the Supreme merger and if the stock is a buy today. So basically, the owner of Vans is merging and basically purchasing Supreme under their basically parent company. So now Supreme is technically going to be a public company, and I'm going to be talking about if it is a buy today. And obviously this is kind of big news because a lot of people would be interested in purchasing it, especially since that company is worth over 2 billion today. Now, right before we jump into it, I'm gonna be leaving a link for Webull down in the description. If you haven't already, make sure to sign up for Webull. Basically, if you sign up, open up a brokerage and deposit at least $100. All you have to do is $100. You get 3 free stocks in total, and this is ending pretty soon, just up until the 16th. So make sure to do so, and you'll get 3 free stocks. And Webull is basically an amazing brokerage. It's even better than Robinhood, in my opinion. So if you haven't already and you live in the United States, I would definitely do that. I'll link down below. So basically, the company that's purchasing is called VF Corp, which is ticker VFC, and basically they're buying Supreme for $2.1 billion. And they're the owners of Vans, the North Face, and a couple others, but those are the main ones. And basically, they're buying it for $2.1 billion. They're gonna be making an additional payment of $300 million for the closing milestone. So I guess that's the purchasing like transaction deal. And basically, you guys know Supreme. They're one of the biggest, I guess, streetwear brands out there, just under Vans actually. So I would say that is pretty nice. They own the North Face, they own Timberlands, and that's pretty funny because they've done collabs in the past before. So that is pretty cool as well. Basically, so let's look at the ticker symbol for VFC. Let's look at the 5-day chart. Ever since they announced it, the stock jumped $10 from 70 to 82, and right now it's hovering at 77. So it's up $7 since they announced it. It's still down for the month though. If we look at today, just today it's down 50 half a percent, I mean, and for the year it's down for the year as well. So if we look at their basically what else they're saying is that they're basically buying it to accelerate their basically all their brands and stuff like that. They've collabed with obviously Louis Vuitton, Nike. They've had a ton of collabs, and they're pretty international now, I would say. Like you go overseas to Europe, people are still wearing it, and people know that brand like internationally. And it will be interesting to see the numbers that actually come in to see how much profit they're actually doing. But it is expected that they will bring in an extra $200 million of revenue a year for the company Vans or VFC. And I believe their earnings per share will go up by about 10 cents or something like that, about that. But it'll be interesting to see all their numbers as they actually get reported and the merger takes place. So it's supposed to be taking place by the end of this year or beginning of December, or I believe either beginning of this month or end of this beginning of next month or end of this month. So that is that. Now, if we look at their stats, right? VFC, let's look at just VFC. They're pretty expensive, man. They usually trade at a 25, 26 PE, which is standard. They're trading at a 62 PE. Now, we have to take a look at their earnings, though. Their earnings are heavily impacted by COVID, right? Because a lot of Vans are in malls, stuff like that. If you're not going out as much, you're not going to be buying shoes as much. But their earnings have been pretty standard this last quarter. Like they still brought in 2.6 billion, which was pretty good. If you can bring in 2.6 billion every quarter, that's already like 3, 6, 9, 12. That's already where you were before the pandemic, right? You were bringing in 10 to 12 before the pandemic. So if you can keep this up, keep this earnings up, you get 2, 4, 6, 8. You get like almost 11. So you're basically back to normal. So if they could keep it up, they're basically back to normal. That's why their basically back P is pretty high. Their trailing P is at 100, but that's why if you look at their 4P, it goes down to 62. And I think if they could keep this up, it should go back down. But it's still at this point of time, it's pretty expensive. Now, their balance sheet is pretty standard. It's actually pretty good. It's at, oh my god, okay, it's at about 10% of what they have in their market cap in cash. If we look at their assets, their cash is about 1.3 billion, and then they have the company's worth about VFC. I don't like looking at Yahoo for this, but they're worth about 30 billion and they have about 1.3 billion. So it's a little low. I would usually expect to have at least 3 billion in cash, which is about 10% of what the company's worth. But I mean, it's still okay. It'll be interesting to see how much debt they take on to take Supreme as well. Now you got to remember that they're probably getting really low interest rates right now, really low interest rates. So it's probably one of the best things to do is take on debt right now as opposed to like a year ago, right? And yeah, that is that. Now, am I personally going to be interested? I'll definitely look into it, but I wouldn't personally purchase this today. I think it's a little bit too expensive. I haven't even looked at the stock chart over the last 5 years, but they have a 2.5 dividend yield, so it's pretty good. I'll definitely say it's not bad. So you can use this as a kind of a dividend play if you're into that. But in 5 years, it's up like 20%. Before the pandemic, it was up 30% in 5 years, which is pretty low. If we take in the dividend, it's still pretty low. And I personally don't really like this. I would definitely like some more growth. If we look at the revenues in the last 4 years, they haven't grown revenues that much. It's been pretty consistent. So if you want to take this as a dividend play and hope that you'll get some growth, this might be definitely pretty interesting. But if you're looking for high growth, 10% plus a year, this probably isn't the company for you unless they can get Supreme at a point where it's bringing in a ton of revenue, right? They said Supreme's only going to bring in like 200 million revenue a year. Or was it 200 million? It was something like that. And the revenues are about 100 million a year. So that is that. So it's going to be about a decent amount, but we just got to see what their bottom line revenues are and how much profit they can bring in. I tried to find the actual revenues of Supreme, but I couldn't really find it. But it's definitely pretty interesting. If you love Supreme and you think they're going to keep growing, I personally don't really care too much about Supreme and stuff like that. And I don't really think they have too crazy of an opportunity. I think it's a very niche market, even less niche than like Louis Vuitton and stuff like that. But it's definitely pretty. I don't think it's a fad at all. Like, I do think Supreme's here to stay. Obviously they have stuff like crazy that they have demand that's insane, but yeah, that is that. So hopefully you guys enjoyed this video. Thanks for watching, and let me know if you're buying Supreme or not. If you haven't subscribed to this channel, make sure to do so. I'm trying to hit 1,000 subscribers ASAP, so if you haven't done it already, make sure to do so. That'll help me out a lot, and I'll see you on my next video.